The market went quiet this week. Not calm quiet, coiled quiet. Underneath that silence, leveraged traders are sitting at one of the most crowded extremes we've measured in months. The Bitcoin price spent most of this week grinding sideways, opening near $63,500 and closing right around $63,300. That's barely a $200 range for the whole week. On the surface, nothing happened. Underneath, the signals told a different story. Bitcoin is sitting about 9% below its 200-day moving average, and that average is falling. The 20-day average is falling too, just above 64,000. The bigger trend still points down, and price hasn't reclaimed either level. Then something interesting happened. Volatility collapsed this week. The Bollinger Bands, which measure how wide or tight Bitcoin's price range is, compressed by 45% in a single day. That's a big squeeze, and it usually means the market is coiling before a move. The question is always which direction. To answer that, look at who's holding what. Funding rates, what leverage traders pay just to keep their bets open, hit the 93rd percentile this week. Leveraged long bets are more crowded than they've been 93% of the time over the past month. But here's the twist. The predicted funding rate flipped negative, a sign the unwind may already be starting. And the split is telling. Top traders, the more sophisticated end of the market, flipped from net long to net short in the past day. Retail traders are still sitting long, near the 76th percentile. Smart money is heading one way, the crowd is heading the other. On-chain data backs this up. Exchange net flow, whether Bitcoin is moving onto exchanges to be sold or held off them, turned sharply positive this week, up over 150% in 7 days. More Bitcoin landing on exchanges usually means more selling pressure building. There's one bright spot. Miners stopped selling. Miner to exchange flow dropped to zero after a large dump earlier in the week, removing one source of near-term selling pressure. And SOPR, whether people selling right now are doing it at a profit or a loss, sits just below 1. Sellers are barely breaking even. That's not confident selling, it's reluctant selling. So here's the full picture. Price is coiled in a tight range. Leverage is at an extreme. Smart money is turning short, while retail stays long. Bitcoin is flowing onto exchanges. The trend still points down. The weight of the evidence leans toward the downside when this coil finally releases. We've seen this setup before. In past cycles, leverage this crowded alongside price, this compress tended to release sharply, flushing the crowded side first, though a violent squeeze upward is possible too. When smart money and the crowd point in opposite directions at a leverage extreme, the crowd tends to be the one that gets caught out. That's not a prediction, just a pattern worth knowing. This week, Bitcoin sits coiled in a tight range, below falling moving averages, with leverage at a 93rd percentile extreme. The BTC bot is leaning short, driven by that crowded leverage and an unwind that's already in progress. If you want to follow these signals yourself, our free crypto sentiment dashboard brings together market sentiment, trader positioning, liquidity, and on-chain activity in one simple view. I'm Idan from Diamond Pigs. See you in next week's market update.